Hello, hello. Okay, I was muted there for a second. Hope everyone is doing well. Sorry about that with the no sound. I got it going now. Thought I'd hop on, do Airbnb earnings. Appreciate everyone being here. Maybe I shouldn't have gone live. It's getting destroyed. I guess we're in a streak now of doing PayPal and now Airbnb. Companies with, I guess, high expectations because it was a good quarter from Airbnb, but the expectations baked into Airbnb were just that much more exciting. And so they got killed. And what's crazy is what's happening here with Upstart. Let me see if I can bring up my screen. So look at this, eh? Airbnb, by the way, getting killed down 10%. We'll be covering that, but the earnings call is starting here very, very soon. So I'll flip through the slides as they're actually talking. But Upstart, on the other hand, let me make sure that I have, there we go. Upstart, on the other hand, is absolutely ripping. So up 40%. Just scroll out and look at that. Wow. Up 36% now, but it's been fluctuating like crazy. So very, very exciting. Funny enough, I hold Airbnb. I don't hold Upstart. So who's the loser today, right? If any of you guys hold Upstart, let me know. Maybe we'll pop in and read some of their earnings. From the little gist that I already read, is that it wasn't all that great. But it's just that the expectations that were baked in were extremely low versus what people are seeing now. So let me flip on over to Airbnb just before the call gets going. I've got the call. Hopefully you guys aren't listening to the music like I am, but I'll just keep an ear for it and continue going. So with Airbnb, just as we're talking, if you're ever looking into Airbnb, whether that's you're a shareholder or you're just looking at it individually, which is kind of out of the scope of the companies that I like to talk about publicly. But I just thought, you know what, I've been having so much fun with these live streams. But anyway, this is a stock that I own. You don't want to look at this company quarter over quarter, okay? It's always year over year because the businesses are so cyclical. So anytime that they're talking, you're going to see things like this where it's year over year or year over the last 4 years. They're doing that to sort of show you what it was before COVID to now, see how we've, sort of adjusted from there, but always year over year. First half of the business, Q1, Q2, usually very strong. People are traveling around more for those quarters, more winter months than Q3, Q4. So, yeah, so let me go ahead and talk about a couple things. So revenue actually beat expectations just by a teensy weensy little bit. I think it was supposed to be 1.78 or something like this. Came out in 1.8 billion. And on the bottom line as well, net income, or actually I know it better for earnings per share. It actually came in at 18 cents. There was estimates between anywhere from 10 cents to 16 cents. Came in at 18 cents. So it was a beat on the top and bottom line. I'll show you guys why we're down. It's definitely in the outlook for guidance. But free cash flow, once again, this is a free cash flow cow. Okay. Airbnb has been printing free cash flow, which is what the market wants to see. That's why they're always expecting great things from Airbnb, because a lot of this is already priced in. But the highest amount of free cash flow that they've ever seen, up 32% year over year. Very, very exciting. Nights booked, I really like this one as well because it just shows you the quantity. I mean, gross booking value also did very good, and they're going to stay, in tandem for the most part. If anything, gross booking value and nights booked should get a little separated just because longer stays are actually becoming more of a thing. So gross booking value would skyrocket from the amount of, days that people are staying. But as you're booking those longer amount of days, usually the per day cost will actually go down. But that shouldn't be too much. The actual amount, like it says here, is up 20%, I think, last year. So we're not going to talk quarter over quarter because the business fluctuates so much. But from last year, I think it was just over 101 million nights booked, so up almost 20%. Let me go over just really quickly, just because we only have like 1 minute here, probably. I mean, they're already past their date. Don't worry, guys. I am listening. I will shift to it the second I start hearing stuff. It's the outlook, okay? Nights and experiences booked will have an unfavorable year-over-year comparison to Q2 2023 as we overlap pent-up 2022 demand following the COVID Omicron variant. We expect year-over-year growth in nights and experiences booked in Q2 2023 to be lower than our revenue growth during the quarter. So a lot of it is in the outlook here. That's why people are upset, because it's there's so much growth baked into Airbnb. But another thing too is also the call. So Brian Chesky has been known to absolutely, move markets whenever. He's been known to move the stock based on how the call actually goes. So we'll end up seeing. Then again, wholly on Upstart. What, maybe we should dive into that after. I'll take a quick peek, because still holding up 37% is unreal. Unreal. Down 10% on Airbnb. Crazy. And it was a good quarter. It's a fine quarter. They also have a share repurchasing thing that's actually starting. So the outstanding amount of shares in this quarter will be going down. And we're already seeing that. So that's very exciting. Just like PayPal, it is technically a dividend to shareholders. It's just unofficial. It's not actually, putting money back in your account, but the amount of money that you're actually, or the amount of ownership that you have in the company will grow as they buy back shares. And for such a young company, it's crazy that ability is actually happening already. Quarterly free cash flow as a percentage of revenue is continuing to grow. Once again, guys, get this through your heads. This is a year-over-year comparison, never quarter-over-quarter, okay? That's just because it's the cyclical nature of this business. So as you can see, if you go through many of the numbers on here, you're not going to find anything that's going to scare you too much. It's just Airbnb. It's one of those unbelievable unicorns. They want the best of the best, and you also are going to pay for that. And I've been sort of shifting my portfolio a little bit to buy companies like this, because it's easier to hold Airbnb than try to figure out when Upstart or something is going to have a great or a bad quarter. I'd rather just, like the Warren Buffett approach to it, is just hold on to amazing companies. Okay, so that's sort of what I'm trying to do with purchasing Airbnb and the likes of it, with like Nubank and Melly, and just shifting my portfolio a little bit to buy excellent companies. So I'm really, really not concerned. If anything, I'm probably just going to buy more with this dip. Might wait a couple weeks to see how the market actually reacts, because if they say something during this call that even scares investors more during, or like for the Q2 earnings, it could even get worse. But that being said, I'm still a believer in this business. I love these asset-free companies like Uber and Lyft and all of these ones. And the problem with those is that there's so much, how do you say it, like competition in terms of whether a customer is going to use Uber or Lyft. And that's actually starting to diverge with how they're actually putting out new products. But the similar thing with Airbnb, right? There's not really any real competition at this time, which is just leaving, for, I think we're jumping in. Give us 1 second. No, never mind. The song was just restarting. Okay. Well, I'll let us know whenever that starts. But yeah, so I don't know if you guys have any questions, if you guys know Airbnb's business or not. They actually just rolled out this new product that is a little bit exciting. I don't know how much people are going to use it, but it's called Airbnb Rooms. So with this new rooms product, instead of just being able to rent out an entire property, you can rent out a single room and the host will still be in the residence with you, right? So they can still go about their day, or even there could be some sort of, whenever it comes to nights and experiences, there can be an experience component to that of, oh, by the way, let me take you out, let me show you the city, let's do all these things as part of the baked in cost or whatever. It's the beautiful thing about Airbnb is that it's up to the host to make a beautiful experience. And, I'm a big believer. If you see my portfolio, whether it's, Shopify or Airbnb or, any of these types of businesses that allow people to make money on their platform. So their biggest benefit is to make other people money. And that's the only way that they're going to make money, right? Those are beautiful businesses because it makes sure that everyone's happy. The customer will be happy because the host is trying harder because that's their living. And then Airbnb will be happier once those hosts are getting more nights booked. The one thing, and they'll talk about this on the call, that's so interesting about Airbnb is that they have zero problems with getting customers through the door. Okay. They get so many customers that it's almost bogged down by the ability to have so many hosts. So that's an amazing problem to have. Like imagine if Uber had the problem of like, oh my God, all of our cars are taken up. We just need drivers. You know what I mean? That would be a beautiful problem to have. So that's one thing that I think that is so scalable is them just getting into different niches where they can sort of, whether it's TV advertisements or YouTube or real estate conferences or whatever the like of it is, but reaching out to more and more hosts, right? And they're actually starting to deal with even bigger sort of, I don't even know what you would call it, like community sites. I mean, that's not what you call it. But I'm blanking here. But they're dealing with bigger hosts, is what I'm trying to say, to an enterprise level almost. So we'll see how that actually builds out, and I hope that they talk about it on the call, as well as talking about things like longer term stays. It's funny in my family. I've got a family member that owns a bunch of properties and everything, and they have all these properties in America where in these gated communities or whatever in Florida, they don't allow for any type of rentals that are less than, month-long stays. And so they say, well, if you're going to rent out the property, then you're going to want to do it with friends and family. But considering the Airbnb is actually starting to branch out and focus more on these long-term stays, that you can still put that on Airbnb. And with things like air cover and stuff that just give so much insurance to the host, which is how they beat out with like Vrbo and these sorts of ones. I wish they called their company VRBO. Vrbo, I think, is dumb. But sorry, with that, all I was trying to say is that like, they're getting their name out more and more often to the point where people just there's nowhere where they need to go other than Airbnb. What time is the call supposed to be? Well, it's supposed to be 10 minutes ago, but honestly, maybe I should just double check and see why they're running late. Maybe they wrote something here. Give me one quick second. I'll check. If they push the time back, I don't know, but I don't see anything, guys. It should just be coming up here. Yeah, I don't see anything quite just yet. Yeah, we're just gonna keep waiting. I'm gonna wait at least till 5 o'clock, um, and see when the call actually comes. See if here. I'll bring my screen back up. I'm just looking at the earnings call. I'll just turn the this is all I'm hearing. So don't worry. I'm paying attention the same way every other investor is. Um, Maybe the price is running up just because we don't have to hear about the terrible Q2 outlook. It's not even terrible. That's the craziest thing. Like it's just already giving warning saying, well, it's not going to be as great because we're going up against pent up demand after COVID. Is just a little bit of a cop out, and it could be true, but people just want great quarter after great quarter after great quarter, and I do too. But yeah, so maybe let's see what we can see here just while we're waiting. I still got music in the ears. Like I said, we'll wait at least till 5 o'clock if we have to. Maybe it ended up getting pushed, but usually these calls don't even get started. Like you don't see this screen unless it's 15 minutes out, and I started getting that at like 4:20. So They could just be a second here. Okay. Sorry. More guests are traveling on Airbnb than ever. I think this is just rewriting. Yeah, see, this is the problem right here. This is exactly what I was talking about. Our current backlog of nights is approximately 25% stronger than a year ago. This is why they're looking just for hosts. And so they're trying to make it easier, more accessible for hosts, and even offering things like Airbnb Rooms, which should also, help because some people just, it's their only property, right? So one of the great things with Airbnb is like, or I guess one of the bad things, but turning into a great thing is that before, people that only had one property would simply either not be able to use it or they only use it whenever they're on vacation. Now you're like, okay, well, I've got one extra room. I can lend it out to guests with really high scores. You get to choose, right? Um, the call is live, not according to me. I can try and redo it, but I don't know why I would still be getting music. Bear with me. Sorry, guys. I'll make sure just to double check this. That comment's got me freaked out. Okay. Bear with me, guys. Just getting into the webcast again. Oh my God, he was right. I don't know
The
why that
large
lagged out
language
for us.
models, think of those as GPT-4. Google has a couple base models, Microsoft Research, and Anthropic. These are like major infrastructure investments. Some of these models might cost tens of billions of dollars worth of compute power. And so think of that as essentially like building a highway. It's a major infrastructure project. And we're not going to do that. We're not an infrastructure company. But we're going to build the cars on the highway. In other words, we're going to design the interface and the tuning of the model on top of AI, on top of the base model. So on top of the base model is the tuning of the models. And the tuning of the models is going to be based on the customer data you have. And I'll just paint a picture for you. Your infrastructure. If you were to ask a question to ChatGPT, and if I were to ask a question to ChatGPT, we're both going to get pretty much the same answer. And the reason both of us are going to get pretty close to the same answer is because ChatGPT doesn't know the difference between you and I, doesn't know anything about us. Now, this is totally fine for many questions, like how far is it from this destination, that destination? But it turns out that a lot of questions in travel aren't really search questions, they're matching questions. In other words, they're questions that the answer depends on who you are and what your preferences are. So, for example, I think that going forward, Airbnb is going to be pretty different. Instead of asking you questions like, where are you going and when are you going? I want us to build a robust profile about you, learn more about you, and ask you two bigger and more fundamental questions. Who are you and what do you want? And ultimately, what I think Airbnb is building is not just a service or a product, but what we are in the largest sense is a global travel community. And the role of Airbnb and that travel community is to be the ultimate host. Think of us with AI as building the ultimate AI concierge that could understand you, and we could build these world-class interfaces, tune our model. Unlike most other travel companies, we know a lot more about our guests and hosts. This is partly why we're investing in the host passport. We want to continue to learn more about people. And then our job is to match you to accommodations, other travel services, and eventually things beyond travel. So that's the big vision of where we're going to go. I think it's an incredibly exciting opportunity. I'll just end by giving you some tactical things we're going to be doing in the next 12 months. Number one is customer service. This is going to be one of the biggest benefits to Airbnb. One of the strengths of Airbnb is that Airbnb's offering is one of a kind. The problem with Airbnb is our service is also one of a kind, and so therefore it's historically less consistent than a hotel. I think AI can level the playing field from a service perspective relative to hotels, because hotels have front desk, Airbnb doesn't. But we have literally millions of people staying on Airbnb every night. And imagine they call customer service. we have agents that have to adjudicate between 70 different user policies. Some of these are as many as 100 pages long. What AI is going to do is be able to give us better service, cheaper, and faster by augmenting the agents. And I think this is going to be something that is a huge transformation. It's a bit all hands on deck, and you see to be improvements later this year and into next year. So that's number one. Number two, we are now building AI into our product. And let me just give you an example. A few months ago, OpenAI launched plugins. And in fact, we were actually supposed to be one of the launch partners for the plugins on OpenAI ChatGPT. But I told Sam, we were literally one of the first to work with him, that right before launch, I decided to pull the plug on it. And the reason why is I decided that the interface of pure text-based with widgets at the bottom was probably not the right interface for travel. Ultimately, I think the right interface for travel is multimodal. It's rich media, it's photo, it's video, it's much more immersive. And GPT-4 is available in our app. So we're going to be building GPT-4 into our interface. And I think that's the real opportunity for us. So you should see some big changes next year with AI built into our app. The final thing I'll say is developer productivity and productivity of our workforce generally. I think, our employees could easily be, especially our developers, 30% more productive in the short to medium term. And this will allow significantly greater throughput through tools like GitHub's Copilot. So all of this is to say, I'm really excited on the short term and the long term. And the last thing I'll just say is, I think the companies that will most benefit from the shift of AI are going to be the companies that have the most innovative cultures. That's kind of what happened in the 90s with the internet. And if the last couple of years is any indication, having launched over 340 features innovations, I think we're definitely going to be right at the forefront of this revolution.
And in terms of profitability, we're just really proud of the progress we've made in our operating efficiency, right? We made some very difficult choices in the midst of COVID to rationalize and streamline the company, get focused, get back to our roots. And we made substantial progress in our profitability ever since. And where have we done it? We obviously reduced our headcount by 25%. We've only grown it moderately since. We've made substantial changes in our marketing efficiency, continue to make good improvements in our operating costs, everything from community support to cost of payments to infrastructure costs. Basically, we've become a better, more rigorous operating company overall. And that kind of progress has been great for us going forward, because even as our business has rebounded, we have stuck to our core strong kind of operating mode. And so even this year, as we anticipate moderation in ADRs, the improvements that we're going to continue to make in community support, infrastructure, cost of payments, and our fixed cost leverage will be enough to offset any of the pressures that we're seeing in average daily rates.
Great. Thank you both.
We'll go next to Mark Mahaney at Evercore ISI.
Okay, thanks. Two questions. Across the online travel space, there's this dynamic of marketing costs being much more front-end loaded this year. Dave, any commentary on from your perspective, why that is? And then secondly, could you just double click a little bit, Brian, on the Brazil and Germany examples that you talked about? If there's anything specific that you could say that you did that caused those to kind of, accelerate up to become two of your fastest growing markets, so that we can think about how replicable those efforts would be in other markets, that would be really helpful. Thank you.
Yeah, sure. Dave, why don't you take the first one?
Yeah, great. Thanks, Mark. In terms of the front loading of marketing costs this year, it's just we're learning to operate better. I mean, we have seen such great success in our brand marketing campaigns, strong return on investments in that last year. And what we learned is that we just felt like we needed to do that earlier in the year, get out even more ahead of our peak travel summer season with our brand marketing. The earlier we get that message out in the year, the better we can kind of reap that investment for the full year. So this is purely about moving up the spend on kind of brand marketing earlier. And to a lesser extent, but it is an element of it as well, is investing in some of these new geographies where we haven't historically had brand marketing. And so actually expanding that marketing into more countries. So our marketing expenses as a percentage of revenue will remain largely the same in 2023 as it was in 2022. It's just that we're front loading more of the marketing to get the message out earlier.
Yeah, and Mark, I'll just share a little bit about Brazil and Germany. So Airbnb is one of the most international companies in the world. We're in 220 countries and regions. And many years ago, we developed a playbook to expand internationally outside the United States. And that playbook included PR, included having some people on the ground, although generally in many of these markets, you don't even need that. It included a brand marketing campaign. It made sure that our product was adequately localized. And it's just a really full funnel approach. And now we've added social media and influencers as well. So recently, over the course of the pandemic, we were not as focused on international expansion. And that's because we were mainly focused on recovery and some of the new travel segments like longer term stays. Over the last 3 years, obviously, as you know, we've gotten really, really focused, back to basics, and our company is significantly more profitable. Now we've done over $3.8 billion in trailing 12-month free cash flow. So we feel like now is a really good time to focus on international expansion. So we started with Germany and Brazil. And again, it was full funnel. It involved a lot of PR, it involved brand marketing, bringing our marketing ad campaigns to pricing in the United States to these markets, localizing our product, and working with local influencers. So it's a pretty full funnel approach. The results have been incredibly positive. These are now two of our fastest growing markets. So we're now looking at bringing this playbook to other markets around the world. And I'll give you a couple of examples. Number one is Asia Pacific. We think there's a huge opportunity in Asia. We are massively underpenetrated. This is going to be probably the fastest growing market internationally over the next 5 years. And the problem with Asia historically over the last few years is Asia market, as you know, is a very much cross-border market. And with the borders being historically kind of locked down and there hasn't been as much travel, the recovery in Asia has been delayed. Now people are starting to travel. And Asia disproportionately has a lot of young travelers. And Airbnb, as you know, is very popular among young travelers. So we think Japan, Korea, China, India, and Southeast Asia are going to be huge opportunities for growth. Next is Europe. We're very big in France. We're very big in the UK. We're now seeing great growth in Germany. But there's a lot of markets in Europe. We haven't ever really run robust brand marketing campaigns. You know, now we're getting more aggressive in Italy. We're getting more aggressive in Spain. And we're now looking at other markets in Northern Europe. And I think there's actually a lot of greenfield in Europe because we've really only focused on a few of the really big markets. And where you see we focus the big markets like France and UK, we are now really strong. And I think we can have similar penetration in other countries in Europe. And then finally is Latin America. We're seeing a lot of growth in Brazil, and we're now going to bring it to some other really large markets like Colombia and some other markets within Latin America. So I think international is going to be a pretty big boon to growth over the next 2-3 years. The one thing I've learned about Airbnb is no matter how different every country is, the playbook doesn't have to vary that much. It works quite well in every market. And especially it works with Airbnb because it's very much a cross-border network effect business.
Yeah, the playbook
Thank you, Brian.
works. So I just don't want to leave the question without just reinforcing that how well the playbook is working for us and that 90% of our traffic remains direct or unpaid. And that's been the case since COVID and continues to be the case. So this investment is working very well for us.
Okay. Thank you, Dave. Thank you, Brian.
Thank you.
We'll move next to Richard Clark at Sanford Bernstein.
Hi, good afternoon. Thanks for taking my questions. Two, if I may. I guess at the full year results, you mentioned how you control supply against the demand. I guess at this point, you're talking about supply growing at about 18%, but you're pointing to Q2 demand growing maybe more like 10 to 12%. You know, which one of those numbers is the right way to think about growth going forward? Should we be extrapolating the 18% or the 10 to 12%? And then just very quickly, you obviously shifted to showing the whole prices. Any impact you've seen from that? Is that impacting conversions? Is that impacting supply? You know, what's been the impact of that change?
Yeah, Richard, why don't I start at a high level?
Great.
I think our long-term growth is going to only be as strong as our supply. If we were to back out, what happened in 2020, 2021 is that demand grew faster than supply. And initially, this was a great thing. But the problem is when demand grows faster than supply and there's supply constraints, prices generally go up. And as prices have risen, while that's been good for the bottom line, you know, affordability in this economy is a major issue. And so one of the most important things we can do to make Airbnb affordable is to make sure we have enough supply in the platform. And so a year ago, we identified supply growth as a major strategic initiative that we really needed to accelerate. And we created an initiative called mainstreaming hosting. The idea is we wanted hosting to be as mainstream as traveling. And we did a number of things. We said, in order to mainstream hosting, we need to make it safe, easy, and cool. So we launched AirCover, which is top to bottom protection. No one else offers it. Airbnb Setup, and we did some marketing campaigns for the first time in many years. We've since seen, as you know, 900,000 incremental listings. It's now accelerating every single quarter since the IPO. And I think what's going to happen is all the supply coming on the market will keep prices from going up. My hope is that while the hotel CEOs have said they expect demand to drive prices up this summer, we want to actually have prices moderate. We think that's going to bring in a whole new generation of travelers to Airbnb. So ultimately, I think that that's a very, very important consideration of the marketplace. The more affordable we are, just like Amazon, the more affordable we are with the wider selection, the more people will come to Airbnb. So that's the high level. Now, with regards to total price, this is primarily a US issue. But in the US, as you know, there is a bit of an issue where some hosts had higher cleaning fees. And we heard a lot from guests. And I think what the total price display is going to do is it's going to push demand to listings that have an overall better value of a total price. And when people turn on the price toggle, we see that people are booking listings with lower cleaning fees or no cleaning fees. And I think this is going to have a really good practice in the marketplace of driving demand to the best value listings, rewarding those hosts, and making sure every single host remains competitive. So it's just beginning. We set a pilot in December. It's now available to everyone. So we'll have to see how this plays out in the coming months. But what my expectation is, based on our release last week, we launched a lot of features around affordability. You know, we have many more, much more affordable monthly stay products. Hosts now have monthly stay discounts, weekly stay discounts. We allow hosts to set more competitive prices. We're going to continue to add supply, and hopefully this is going to continue to address the number one request of travelers, which is affordable options.
And let me add two more points. The implementation of the whole price has gone really well. And what we're seeing is actually a neutral impact on our overall business. So the thoughtful way in which we've implemented has worked quite well. The people that care the most about seeing it, all in pricing, they can make the selection. And those who want to see it like other marketplaces don't need to make that selection. And then the other, back to the growth rates, 10 to 12% nights growth is not our long-term ambition. You do have to remember that in Q2, we have a significant hard comparison versus the Omicron COVID variant that came out last year. Remember that people delayed their travel in Q1 and compressed a large amount of travel into the second quarter, which makes for a hard comparison of nights growth here in the second quarter.
Thanks. Thanks very much.
Thank you, Richard.
We'll take our next question from Brian Nowak at Morgan Stanley.
Great. Thanks for taking my questions. I have two. The first one, Brian, just go back to your last answer about how affordability is an issue in the economy. On the Airbnb platform, have you seen any signs of trade down or shorter stays or price changes or lower traffic conversion sort of impacts of that more price sensitive user on the platform yet? That's the first one. Then the second one, Dave, actually to go back to your last answer as well, I think in the past you've spoken about how there's a lot of moving pieces around the shape of the year, but 2022 was a reasonable way to think about the shape of the room nights or bookings for the year. How should we think about that now that sort of thinking through the comp structure and how the 2Q, 3Q comps are quite similar? Thanks.
Dave, do you want to take the second and I'll then on with the first?
Yeah, I mean, it has been hard to kind of perfectly predict the exact shape of demand. And obviously, Omicron has impacted the shape on nights demand by more than the impact of revenue. We continue to see, as the revenue guide that we have here is, revenue growth between kind of 12 and 16% in the second quarter. And I think that there's some of the pressures that we're seeing there on overall revenue growth has frankly just been some of the elevated ADR rates that we're seeing, just higher overall kind of pricing, especially in North America. But some of the tailwinds that we're seeing for future growth in the back half of the year are a lot of the areas that Brian spoke about, things like continued acceleration in Latin America, acceleration in Asia Pacific, and more cross-border travel. So I think some of those things are the benefits we're seeing in the back half of the year. Q2 is turning out to be a little bit tougher comp given Omicron last year, but we're seeing overall stable demand for the back half. We highlight in the letter that we have 25% more bookings on the books at this time this year for the back half of the year than we did this time last year. So it just gives us confidence in people's willingness and interest in travel for the back half.
And I can just take the first question, which is What we're seeing, Brian, is that people are most price sensitive, at least currently in North America, especially the United States. And in the United States, the lowest price listings have the highest occupancy. So yes, people do want low price listings, and we expect that as Airbnb rates continue to normalize, and hopefully our rates do not increase as fast as hotels over the next couple of years, that we're going to see continued increase in occupancy for more listings in Airbnb. And also is partly why we're so bullish about the prospect for Airbnb Rooms, not just to bring people to Airbnb that want affordable options, but really new travelers that have never really traveled very much before, especially Gen Z.
Great. Thank you both.
Thank you.
Next, we'll go to Ron Josey at Citi.
Great. Thanks for taking the question. Brian, you talked about expanding the core, and I wanted to ask a little bit more about new ideas for products or the vision for the Airbnb economy overall. I think we've mentioned in the past the marketplace for local host services and other sponsored listings, other ideas. So any insights on sort of how you think about expanding the core and the vision for the Airbnb economy? And then just a quick follow-up too, on just the experiences rebuild, that recent pause on experiences. Talk to us a little bit more about how you feel that product is progressing. Thank you, guys.
Expanding the core is such a funny statement.
Yeah, Ron, I mean, great questions. Just to kind of step back, before the pandemic, we were really already focused on expanding beyond the core. In fact, we had 10 different divisions at Airbnb. We had a homes division, we had an experiences division, we had a transportation division, we had a magazine division. So we had a lot of efforts. And then obviously the pandemic occurred and we had to get focused back to basics. And what we've wanted to do over the last few years is, before we work on new things, we wanted to perfect our core service. One of the great sources of inspiration I had was Apple. And I remember in the mid-2000s, it was 2006, and Apple had not yet launched the iPhone. But how many of us wanted Apple to come out with a phone? And the answer is a lot of people. And the reason people wanted Apple to expand to the phone is because they love their iPod. But how many of us wanted Gateway to come out with a phone? And the answer is probably not many, because we didn't love our Gateway computer. And so I think that one of the things I've told our team is we have numerous expansion opportunities, but we need permission to expand beyond our core. We need people to first love our core service. So that's why over the last 3 years, we've been focused on really perfecting our core service. That being said, our core service is stronger than ever. It's more profitable than ever. And I think we're now ready to expand beyond the core. So as we speak, we are working actively on new products and services. These new products and services are going to be shipping beginning next year. You're going to see a number of things ship next May as part of the 2024 summer release. And we're going to see even more things ship later in the year in the years to come. Now, obviously, there's a lot of opportunities. There's guest services, there's host services. I'm not going to go into a lot of detail. You obviously will have to tune in to talk. But I think it's just important to note that I think that the biggest ideas Airbnb has are in front of us. I don't want to think that the biggest idea I ever had when I was 26 working at a 3-bedroom apartment with my 2 co-founders. I think that there's so much more Airbnb can offer. And part of it is just making sure we continue to learn more, build robust profiles, build an extensible platform model, continue to increase trust in the platform. And then what we can do is go into adjacencies within our core, but then including that, expand beyond the core. So I think you're going to see a lot of new opportunities. With regards to experiences, I remain bullish about the product. I think there is a massive opportunity for someone to build a huge product around experiences. Whether it's us and whether we're able to execute that product, we still have to prove that. One of my great investors, one of my early investors is Mark Andreessen. He said, there's no bad ideas, just ideas that are too early. And, a lot of life is timing and experiences. I think when we launched in 2016, it launched right leading into the pandemic. It was probably early. I think the timing is probably now better. So what we did is we decided, let's take a pause on new submissions. Let's retool the product and hopefully put out something that is even more relevant to this next generation that are looking for things to do. So I remain really bullish on all of this.
Thank you, Brian.
We'll go next to Mario Lu at Barclays.
Great. Thanks for taking the question. The first one is on ADRs. Came better than expected in the first quarter. You guys mentioned India saw 8% growth. Anything to point out to within that region for its strength? And then Is the full year growth still expected to be down mid-single digits? Thanks.
Dave?
Yeah, on ADRs, it's just been interesting how persistently high our average daily rates have remained, and that has been consistent kind of or across the globe. I think even more particularly the ADR rates that we saw in North America have been persistently high. So, these are a lot of the reasons why we've been launching so many of the tools and capabilities that Brian's talked about on the call today, making sure that we're finding good affordability for our guests through things like Airbnb Rooms and giving tools for a host to even kind of price better. So I don't have any more to say on that, except that we think that the ADRs, as we continue to see growth in Europe, Latin America, Asia, should moderate a bit here in the second quarter. And we want to continue to make sure we're giving great value to our guests. In terms of full year expectations, the year-over-year growth in ADR should be, I think, still probably down in that kind of mid-single digit range. There's really no change in our expectations on ADR growth.
Got it. Thank you. And then the second question is on competition. One of your competitors is launching a loyalty program in July in the U.S. Just curious if you think that is a potential threat to their business since you don't have one, and any data points you can share just with regards to what percentage of listings are exclusive to your platform. Thanks.
I always believe that the best loyalty program is people loving your product. And if they love your products, they come back. And I think that's the reason why nearly 90% of our traffic is direct or organic, and we have really strong rebooker rates. So, I mean, we haven't needed to have a loyalty program to have really good loyalty on Airbnb because people really love the experience. And ultimately, I think it's just a matter of continuing to innovate. Ultimately, we're in the inspiration business. People want to have good trips, and the best trip wins. And whatever company is most focused on listening to customer feedback, innovating as quickly as possible, and taking giant leaps of experiences, I think it's going to be the most successful. So we're really bullish about this. Now, that being said, for years, we've looked at a loyalty program, and I don't think a classic points program, which is essentially a subsidy to buy loyalty, is the right approach for us. But we do think there's really compelling, interesting ways to reward our very best guests, and it's something we've been actively thinking about.
Great. Thank you.
We'll take our next question from Nick Jones at JMP Securities.
Great. Thanks for taking the questions. So you're adding a lot of great solutions for hosts and guests, and in the Outlook comments and the release, sounds like this is contributing a little bit to some of the ADR pressure. So how do you balance the efforts to continue to increase supply, making it easier for supply to join while redistributing demand to available supply? Is there a risk of incremental ADR compression as a result of some of these efforts?
Hey, Nick, I can start. So, I mean, I think part of our secret sauce is our ability to really try to elegantly balance supply and demand. One of the great things we've seen is the marketplace has a natural equilibrium that it finds in itself. For example, the fastest growing markets of supply are also turn out to be the fastest growing markets for demand. So when demand creates supply, what ends up happening is a lot of these individual hosts get booked. They start making a bunch of money, obviously. The vast majority of them get booked within days of listing. And what ends up happening is they tend to open up more nights, they tell their friends about it, and then supply increases. But we've also found a number of tactics. In fact, performance marketing is a very important way that we balance supply and demand. Other companies tend to use it as an arbitrage business to buy lots of customers. We've never thought of it that way. We think of performance marketing really as a laser, to laser in on balancing supply and demand in markets all over the world. And frankly, the more supply we add, the more we think we're going to have really great value listings that will ultimately attract more demand. So I think we're able to balance this out throughout the coming year.
Great, thank you.
Mr. Kelly with Oppenheimer, please go ahead.
Hey, great. Thanks for taking my question. Just going back to the comment in the shareholder letter of, your current backlog of nights being approximately 25% stronger than it was a year ago. Can you just reconcile that with the 2Q guide? And, how should we expect normal seasonality trends going forward? And then my second question, Brian, is you've done a great job with apartments and rooms growing supply in the U.S. Can you take that apartments initiative and implement it in Europe and other regions of the world? Thank you.
Yeah, and the 25%, I think what it's doing is just demonstrating the strength in demand. I think if you go back to the beginning of Q1, people booked much earlier here in 2023 than they have historically. So we had longer overall booking rates for the back half of the year. So we're seeing that strength. And so to the extent that demand just shifts earlier in the year, that's why the growth rate in backlog can still be higher than what we are projecting for nights in any kind of given period. In terms of normalcy, I think it's the specific percentage of backlog isn't a direct translation to kind of nights booked, but what we are seeing is strong demand across the globe and very stable demand in North America.
And Jed, just to clarify a question, when you say apartments, are you referring to the Airbnb-friendly apartments?
Yeah, the friendly apartments.
With landlords and real estate developers?
Yeah, can you do
that's
that?
Great. So 100%, yes. We believe that this can be expanded all over the world. We wanted to use the United States as a proof of concept. Obviously, that was, we thought, the first place to start. So we started with about 175 buildings. We now have, I think, over 250 buildings. We have, Greystar and some of the biggest real estate developers in America on the platform. And that's been our proof of concept. But assuming this works, and all indications are it is going to work, the response has actually exceeded our expectation, at least from landlords, then yeah, we'd love to bring this to Europe, Latin America, and Asia.
Thank you.
We'll move next to Justin Post at Bank of America.
Great. A couple questions. I guess the first thing about competition, as you move into Europe, you might see a big competitor in booking. Can you talk about your model where you charge both the host and the guest versus theirs more heavily weighted to the host? Do you think that works well in Europe, and how do you think about the differences there? And then maybe for Dave, on the marketing spend, definitely seems like the timing's different. How do you think about marketing ROIs this year versus prior years? How should we think about that? Thank you.
Dave, you want to take the second question first?
Sure.
Yeah,
No, the marketing ROIs, again, I'm very pleased with our overall marketing strategy. I'm happy that our 90% of our traffic remains direct or unpaid, and that does great returns. And the brand marketing returns on that we've seen have been quite strong, which is why we're expanding into some of the markets. Also, the return on our search engine marketing has been quite good, and we're maintaining high ROIs there and making sure that where we have opportunities to drive incremental profit, we do so. So I feel really good about the investment we're making. I like the improved timing that we have here in 2023. And I like the overall approach to this full funnel marketing that Brian's talking about. When we amplify our brand and search engine marketing with things like social and PR, and we have that full funnel approach, it works really well. And that's the kind of success we're seeing in Brazil and in Germany.
Yeah, and maybe Justin, before I answer about our model in Europe, I just want to also add something. So most travel companies, their strategy is like basically paid marketing, right? Performance marketing and brand marketing. I think a call out I just want to make is PR, social media, is a huge benefit to Airbnb. Historically, we have the largest share of voice in travel. Last week, we got 3,000 articles. That was like more than a third of the amount of press we got for IPO. So we think that there's a lot of opportunity for Airbnb to continue to be front and center in people's minds in PR and social media, and even in pop culture, on TV shows, movies, songs, et cetera, et cetera. So I think the name of the game is both paid media and then earned media. And earned media is a really important part of an international story, international expansion, because earned media really creates trust more than paid media, Now, with regards to Europe, the one thing I just want to point out is we actually have both models. We have a model where we have a guest fee and a host fee. We also have a model where we have a host-only fee, and hosts can choose. And we have this kind of choice for hosts, especially for larger property managers. Ultimately, especially with our total price display, I don't think it's a major issue for guests. I think ultimately they're going to be looking at the total price, and we've not seen a major behavior change. I think guests are most sensitive to total price. They're becoming more savvy. They're getting trained on total price. And that is partly why we moved our product towards an option of showing people total price. As long as we remain competitive, as long as we offer the best product and we offer the overall best value from the total price, I think that's ultimately what guests are going to care about.
Great. Thank you.
And as a reminder, please limit yourself to one question to allow everyone an opportunity to ask a question. We'll go next to Stephen Ju at Credit Suisse.
Okay, thank you. So, Brian, can you talk about eventual rollout plans for pay over time to other parts of the world, like Brazil? Given the propensity among users there to use this type of product. And I guess I'll ask the Airbnb Rooms question another way. Between this and pay over time, it seems like you are in a position to expand your audience. So, can you talk about how much latent demand you may potentially unlock with what looks like higher service levels to that bargain shopper? Thanks.
Yeah, so I'll talk. One of the things, what you'll notice is a lot of our updates last week were based on affordability. So we announced a partnership with Klarna, which is pay over time, where you can pay in as many as 4 installments. I also want to add, we also announced a partnership with Stripe, where you can pay by bank account for monthly stays. This is really important because it means you don't have to pay for a credit card to pay basically what is essentially rent, and that also will increase conversion by lowering costs. So we're really focused, and a lot of what we're focused on is starting these payment services in the United States, kind of similar to Airbnb-friendly apartments, and assuming these partnerships work, no doubt we're going to be expanding these to markets all over the world. And you're correct, a lot of countries people pay in installments more than even in the United States. So yes, Brazil and emerging markets all over the world, I think this will absolutely be a very compelling offering. We just like to get the product right in our more established markets, like the United States, before expanding it globally. But all indications are this is going to be very successful. Now, as far as expanding our audience, yes, ultimately the biggest market opportunity for any company is always the next generation. The great thing about young people is more of them every year. And if you can continue to be the most relevant brand for a young audience, then you're going to continue to be able to ride that growth. And that's going to definitely be a boon for first-time bookers. And the great thing about young people is, 15 years ago, I was 26 and my friends and I didn't have a lot of money. Now, many of us have families and we're much older. We have more money. And so what we want to do is capture the next generation of travelers, and then they'll grow with us. And I think that Airbnb Rooms is a great entry-level product. It's a great way to introduce people to Airbnb. I noticed, for example, when I used to talk to Jeff Bezos, he said that diapers was a very important entry product to Amazon for families, right? You buy diapers and then also you need other things. This is maybe an extreme example, but I think Airbnb Rooms is a great way for new travelers to come to Airbnb. And if you think about it, between Airbnb Rooms, allowing the pricing tool for hosts to price more affordably, total price, which should keep the cleaning fees down, and other discount products, I think we're going to have really one of the most affordable products in travel, bar none.
Thank you.
We'll go next to John Colantoni at Jefferies.
Great, thanks for taking my questions. Active listings expanded more this quarter than in recent quarters. When you look at the profile of these new active listings, overall, how do these listings compare to your existing portfolio? What portion of the hosts are individuals, urban versus suburban versus vacation destinations, et cetera? Then on sales and marketing, with front-end loaded spending on brand investments, can you just sort of walk through the shape of marketing throughout the year? Thanks.
Yeah, Dave, why don't you take both of these?
Sure. I think we talked about the shape of marketing during the year, that we are bringing in the more front-end loading on our brand marketing spend, especially here into Q1 and Q2. So it's several hundred basis points higher in Q2 than it was in Q2 last year. And then for the full year, total marketing costs will be roughly the same as they were in the prior year. So I don't have much more to say on kind of the shape of marketing beyond that. In terms of active listings, I think this is what's been really continued strength in our business, which is that we are focused on the individual hosts. and individual hosts are 90% of our hosts. That continues to be the case. The new hosts that we're bringing on, because we cater our tools to the needs of those individual hosts, whether that's making sure that it's easy to list, that we give them air cover for hosts so that they know that their home is well protected. We give them the great payment capabilities, the customer support that they require. All those things make it easier for individuals. And what's been great to see is that our mix of individual and professional hosts has remained very stable through that. The other thing that's been interesting about just our listings growth overall is it tends to grow where we have the biggest demand. And so the areas, as urbans come back, our urban growth has been, kept in line with that kind of growth. And so as we keep expanding and increasing our business around the world, the listings come right along with it.
Great, thank you.
We'll go next to Doug Anmuth at JP Morgan.
Thanks for taking the question. I just want to ask about long-term stays. The percentage is down versus recent periods. I know you talked about some of the changes in payments and fees coming up. Just are long-term stays slowing more with normalization in the economy, or really just more of a mix shift issue towards shorter stays? Thanks.
Yeah, hey, Doug. I think it's important to just step back and say that what we saw even before the pandemic was that long-term stays were growing, and they have been our fastest growing segment by tripling. I think what the pandemic did is it probably accelerated some inevitable growth in this huge opportunity for us. And I also think we're never going back to the way the world was before the pandemic. I do think there is some little bit of a post-pandemic equilibrium that you're starting to see, and we're also seeing a mix shift because cross-border urban nights are now up. That being said, I remain extremely bullish on long-term stays. I think this is going to be one of the big growth opportunities for Airbnb over the next 5 years. And the reason why is because people are permanently more flexible. Even bosses that want people back to the office, I think they're still going to see incremental flexibility. More, people going away for the summer, more people maybe going away for the holidays. And ultimately with AI, you're going to see an acceleration of people having more distributed and more global workforces. So all you have to do is believe Zoom is here to stay, to believe long-term stays are here to stay. And that's what we're betting on. But the biggest feedback we've gotten on our long-term stay product was it was just sometimes a little more expensive to book long-term stay on Airbnb because the platform was built for short-term stays. So we made over a dozen upgrades to long-term stays, and a lot of them are based on affordability. So starting with, we now have a monthly dial for you to really discover monthly stays. It's this really cool dial, like an iPod quick wheel, that allows you to search from 1 month to a year on Airbnb. You can pay by bank account. This saves on credit card processing fees. You can pay over time. We have more flexible cancellation policies, so you now can cancel a long-term stay up to 1 month before check-in. We have new discounting tools for hosts on weekly stays and monthly stays, and we have many other upgrades as well for monthly stays. So I think we're going to see a lot more growth. And one of the big opportunities, I think, Doug, that we're going to see is more people starting to come to Airbnb to list exclusively long-term stays. People that have no intention of hosting on a nightly basis will host long-term. Another thing we believe is going to happen is we think long-term stays could be a gateway to short-term stays. There might be hosts that aren't comfortable hosting on a nightly basis, but they're used to having a tenant, and they might go to Airbnb to rent monthly, and over time, we might be able to get them more comfortable on a short-term basis. So we think this is a really big opportunity for us, but I do think there is some normalization in this post-pandemic equilibrium, but I believe this is still a major growth opportunity for years to come.
Thank you, Brian.
We'll move next to Lee Horowitz at Deutsche Bank.
Great, thanks for taking the questions. Brian, maybe circling back to the competitive environment, it strikes us that given some of the numbers coming out of your large OTA competitors, that the industry has grown incrementally more competitive in the last year or so. Can you help us understand from your seat if you have seen a change in the competitive environment over the last 12 months and what your expectations are for how competition may evolve over the next couple of years? And then Dave, can you talk about how you think about balancing margins and investments beyond this year? Assuming rates aren't a headwind moving forward, it strikes us that international investments are set to grow nicely over the next couple of years. I guess with this in mind, how do you think about how margins can progress in the coming years given your investment priorities? Thank you both.
I didn't get any of that.
All right, yeah, Haley, I'll start with the first one, competitive environment. I think it's important to note that Airbnb is more than double the size of the pandemic. And most of the travel industry is only a little bit larger than they were before the pandemic. So there's been a major mix shift share towards Airbnb. I think we're starting to see some of the old ways of traveling recover, specifically urban and cross-border. But ultimately, we're really focused on innovating. We're focused on playing our own game. And I think that we're going to continue to focus on a few areas. We're going to continue to mainstream hosting. And we think we're going to be adding more supply of homes than any other company. Next, we're going to be focused on perfecting our core service. I think there's potentially down the road a tipping point where a whole new cohort of people could be comfortable using Airbnb. The biggest obstacle to Airbnb historically has been reliability and consistency. As I said, the biggest strength we have is we're one of a kind. The biggest weakness we have is it's just hard to be as consistent as a hotel. But again, with AI being able to supplement and augment customer service, and with many of our other initiatives to perfect the core service, I think we can introduce a whole new category of travelers to Airbnb. And this doesn't even include many of the opportunities we have with younger travelers, with new markets, and new products and services that are only on Airbnb. I also just generally would just say, one of the big guiding principles I have is to focus on the things that only Airbnb can do. And if we focus on the things that only Airbnb can do, then in a sense, you're going to come to Airbnb and we're going to have a lot of demand, a lot of exclusive traffic. And Airbnb Rooms is just one of many examples of something that only Airbnb offers. And so we're going to continue to be competitive, but we're also going to focus on things that only we offer. Dave?
Yeah, I think one of the things I'm really proud of is the ability for us to both grow and grow profitably and have very strong margins. I mean, having our 44% kind of free cash flow margin is something I'm definitely very proud of. I think going forward, just remember that we are still heavily in growth mode, and we're going to continue to invest behind growth for the future. The good news is that as I'm doing this year, we're able to continue to be very rigorous in our investments across our P&L, make improvements in our cost structure, find fixed cost leverage, and do all that while investing for kind of growth for the future. So what I think you should anticipate going forward is that we'll continue to have a profitable business focused on growth, and that over time we'll continue to have opportunities to expand margins, but that's not my primary focus right now. My primary focus is in investing for growth. And as you mentioned, one of those areas for opportunities will be to increase our investment in areas where we're significantly underpenetrated and seeing great success. And we highlighted a couple of those areas on the call today.
And that does conclude today's question and answer session. At this time, I would like to turn the conference back over to Brian Chesky for closing remarks.
All right. Well, thank you, everyone, for joining us today. Just to recap, we had a strong start to 2023. Revenue was $1.8 billion, which is 20% higher than a year ago. Net income and adjusted EBITDA were both records for Q1. And our trailing 12-month free cash flow was $3.8 billion. And that represents a free cash flow margin of 44%. I'm really proud of the progress we made. If you look at over the last 3 years, how much more profitable the company's become, I think a lot of that has been based on our discipline and our execution. And speaking of execution, our product just keeps getting better, and we continue to innovate with more than 50 upgrades and features last week and many more ahead later this year. I'm proud of what we're doing, and I'm really excited for the road ahead. So thank you all, and we'll talk next quarter.
And that does conclude today's.
Boom. Okay. So the call did not change the sentiment. People took Q2 guidance and they decided what they wanted for Airbnb going forward, and that was to sell. Get out. Go. Okay. Let's do a little recap, though. A couple of things that I heard very exciting. Okay, here's the thing. If you look at this from a pure value perspective, a couple of things that Brian said could scare you, where he's saying that they're almost making their product so good that it's making the market more competitive, and so everyone is going to be dropping their rates. What he talked about is transparent pricing, which whenever it came to transparent pricing, what he noticed is that a lot of hosts were actually dropping off their cleaning fees And then that would actually put them to the top of the booking list because their costs would be cheaper. But then that actually brings down the average, daily rate. So the, gross booking value or the total amount of processing volume that they get to bring through their market is how they get paid, right? So the problem is whenever you make your product so good that people get so competitive that the average booking volume goes, or the average booking cost goes down. That's a good and a bad thing. You know what I mean? Like, that means that the total addressable market gets so much bigger for Airbnb. More people want to use it if it gets cheaper. But in the short term, if there's the same amount of bookings and people are spending less, then they're going to make less. So it's almost like this is the problem with innovation, is that you almost end up cannibalizing yourself in a way. But the companies that have survived the test of time have cannibalized themselves in one form or another in order to survive and thrive. A company that I think about all the time, maybe the number one example of a company cannibalizing themselves, was Apple. Their largest product was the iPod. It was an amazing seller, but they knew that they had to get the iPhone going, and then that cannibalized their iPod sales. At the time, it hurt, and looking back on it, they would have got crushed if they didn't. So they still became the largest company, on the stock market. So very, very important that they made that call. I think Brian Chesky is so much like this in the same sort of respect. Like I was showing with his Twitter posts, just constantly putting out new products that make it easier for hosts and guests to sort of find each other, make payments, lower the pricing, which at the end of the day, that can hurt their business in the short term, let less volume going through their system, but overall it maybe expands the market. If they can be, like Brian said, the cool app where people go to find their, anything whenever they think of their stays, bookings for travel, or even experiences, the young people coming in will want to use that product. So they are going to continue to be the most innovative company, which in the short term does not lead to printing a ton of money. However, they still are like they said, 44% free cash flow margin. It's unbelievable. This is what only Airbnb can do. It's the new asset-free style of business. However, it's Q2. It's the short-term outlook that people are worried about. Maybe all the COVID hype has died down. Does that mean that the company is worth the 11% sell-off? No, I wouldn't say so. I'll probably purchase a little bit more. I haven't yet. But I'm a believer in Airbnb, and not for this quarter, not for 2023, but for 2030. You know what I mean? I've even posted a video on what I think Airbnb's stock price will be by 2030. So check that out after this if you guys like. But yeah, absolutely a major believer in not only management. Brian's an excellent CEO. I'm in love with their execution. I'm in love with the innovation. We're seeing a little bump here. I'm sure that'll disappear in a second. But yeah, absolutely amazing. A couple things that they did say for this quarter specifically. $2.5 billion share buyback plan. Awesome, right? If investors aren't going to believe in their company, they'll believe in themselves, and that's fine. That's perfectly fine. They know that their stock is worth it, and so they'll buy it back. That's what Warren Buffett did for Berkshire Hathaway. But yeah, like they said, they still don't think that some of these features that other companies have to rely on to continue to keep a large customer base, like loyalty programs or advertisements, are really needed here for Airbnb. 90% of their traffic is organic, and sorry, that just having the best product is bringing the customer back. They don't need a loyalty program. However, that being said, they did say, and I would have thought that they wouldn't have said this, Brian Chesky has been adamant that, they want to just bring the most, how do you say it? Like compelling core product, right? They just want to keep developing their main, nights, bookings, expand that internationally, and focus on a core product. Don't get distracted. That changed this quarter. This is different than every other quarter, because every other time anyone's asked him if they are going to expand beyond the core, then, he usually shuts that idea down. They're saying, no, now that's changed. We have a massive audience that loves what we do, and now we can expand. Quite exciting. Really quickly, because I just want to show this off still. Upstart is still holding up their 38%, up. It's not up 50% as it was, but I didn't expect it to. 37% up is still a great quarter. We'll have to dive into that later, or maybe I'll do that for another video. But yeah, so very, very compelling things. I'm still a believer in this company. The price is not something I look at for Airbnb. Truly. It's a set it and forget it. This is an amazing long-term hold that I believe in, just for the entire sector. But that's just me. That's just what I'm doing with my money. You don't have to follow it. And I don't even want you to follow it. Leave the shares to me. I'll buy when I can. But yeah, a little bit of cannibalization. That's what I noticed during the call. Making sure that the app is the best in the business. There is competition, but they don't even really see it as competition. They see the hotels and these sorts of things as being the competition because of the pricing. But due to these new models, they're going to continue to, try to fight back and let hosts do what they do to try to get picked more. It's like capitalism at its finest. People are just going to keep lowering their rates until they find that, calculus middle ground of, how many nights that people are actually booking my site and how affordable it can be and how much money I'm going to make. And they're letting the market speak for itself while adding new ways for people to find different options. They are just looking for hosts at this point. All the guests are coming back constantly. They have a 25% increase on their backlog stays, which is just, crazy. Just going forward, they think, things might change somehow, but I just think it's based on a year-over-year guidance rather than how great the company is actually doing, over the long term. I'm still a big believer. Something would need to happen for me to actually believe that this would slow down. I don't see it. Maybe some other people would change my mind, but yeah. I also love all these different things that they're doing. Like they showed Air Cover and that was massively successful. So now they're doing, Airbnb Setup, which is going to help with new hosts, and then Airbnb friendly apartments, leading to, much, much larger hosts and these sorts of things. Very, very cool. Very cool. There's so much room to expand. And like they said, a lot more this time than ever is the international expansion will start to ramp up. Places like Asia, Latin America, lots of expansion there. Okay, bear with me here. Upstart CEO is so bad. My worst investment. I'm surprised that you said that during today's, read. I actually haven't looked into it. But that's also the reason why I haven't really purchased Upstart. I know that there was, I don't look into them often, but from what I could read whenever I was reading about them is that they're like 3 bundled together. I don't know if they're all CEOs, but there are 3 people in management that practically started the company, all the founders. And they were all pretty amateur hour from the first glance that I took at the company. Honestly, I don't read a lot about Upstart. Once some big users or big partners actually start joining, maybe I will, rather than just small regional banks and the likes of that. But for the most part, I love these quality companies like Airbnb right now. Allows me to focus on other things while still believing that my investment is safe, even though that's such a funny statement whenever we're down 11%. But truly, I am up on my investment on Airbnb regardless. This is one of them that I'm in the green. But yeah, we'll have to see how it plays out. I'd love to know what you guys think about Airbnb, and what do you guys think about the coverage of a little bit more companies outside the scope of just fintech and e-commerce, which for the most part is what I do want to stick into. Which, like, there was some comments by Ricky, for example, stating that it probably would have been more reasonable for my channel to actually cover Upstart, but the truth is I don't hold it. And it was timed at the exact same time that Airbnb's call was going to go live. So I'm going to listen to the one where I got the money in. So, and it's a decent position that I got for Airbnb. It's not necessarily a small one, which, who's caught with their pants down now, right? Now that the stock is down 11% after hours. right after the PayPal earnings too. Like I had a really, really good streak going there of like, what was it? Shopify up just, I think it was like 30 something percent for the week. And then Coinbase was up a ton. And there was a bunch of my positions. I was feeling so hot in my portfolio just for the week, right? And then PayPal, and then the next day Airbnb, and, you know, bring us back to reality. But overall, I do think I'm picking market leaders, or ones that are gaining market share, right? That's the most important thing across the board. Market share. Where do you lie? Is the total addressable market gaining? These are how I myself am picking stocks that I believe in for a very long time. Now, you hear names like Coinbase and these sorts of things. Like, those are my speculative positions. Okay, so don't listen thinking that Coinbase is like one of my larger positions. It's not. It's just a hedge on my cryptocurrency. I don't really hold much cryptocurrency, and on the off chance that ever does a run, that's why I hold a Coinbase. I'm just a believer in equity positions. I believe that things like share buybacks can't. Well, actually, I was about to say something that's not true. I guess there could be share buybacks in cryptocurrencies with burning and stuff like this. Anyway, I am so off topic. It's crazy. PayPal is cheap at this valuation. I agree. I think that, if Airbnb can continue, to buy as many shares back with their printing free cash flow, it'll be a very similar situation to what PayPal's doing. One strategy that I find PayPal does unbelievably good at, and Airbnb we're yet to see, is how does the acquisition strategy go? And then once you actually are printing this much free cash flow, it's like, what are you going to do with all that money? You know what I mean? Are you just going to buy back shares, or are you going to go out there and try to, catch a couple strategic investments, these sorts of things? And I mean big ones, not tiny little things. I mean making a really big play. So far, I haven't seen that from Airbnb, and PayPal I have, and I'm very, very excited about how PayPal deals with their free cash flow. But yeah, share repurchases isn't too bad. I like 2.5 billion going back into the, overall, take it out of the overall amount of outstanding shares. What else do we need to talk about? Maybe we want to read a little bit of the outlook, because this is why it's down 11%. In Q2 of 2023, this is where everyone got a little hurt. We expect adjusted EBITDA to be similar to adjusted EBITDA in Q2 of 2022 on a nominal basis, but lower on a margin basis. This anticipated year-over-year decline in adjusted EBITDA margin is primarily driven by changes in the expected timing of the market spend relative to the prior year. Compared to Q2 of 2022, we expected that sales and marketing expense in Q2 of 2023 will be approximately 400 basis points higher as a percentage of revenue as we deploy marketing earlier in the year than last year. We continue to anticipate a full year adjusted EBITDA margin that is broadly in line with the full year of 2022. Are they doing buybacks this quarter? Yes. But yeah, that's really where they missed big, was on the adjusted EBITDA. Overall, guys, I'm not quivering in my boots. Very happy. I'm not worried about what, this one quarter or something like this has to, or Q2 has to play into Airbnb's overall future. I believe in Brian Chesky. I believe in waiting a long time. I think a lot of people on YouTube, this is one thing I'll say, is that I think a lot of people on YouTube especially say they're long-term holders. Guys, I hold positions for a long time. The first position that I've ever purchased in the stock market, the actual position I've bought and sold a couple times. It was Tesla. But in terms of still holding Tesla, I'm still a long-time believer, just taking, short-term, positions out to actually, benefit on the capital gain. But regardless, I do love holding positions for a very long time. I don't actually have the years under me to say that I've held a position, for 10 years now. The first position that I bought was 2018. I'm 25 today. I still hold Tesla, so As far as it comes, I absolutely am a very long-term holder. I will continue to hold Airbnb unless something drastic changes. And I mean regulation, change in management, complete change in strategy if I don't agree with it. But right now, I love the asset-free strategy. I love what they're doing. I don't see anything crazy. They're focused on what their actual, business is, and they're willing to expand into other markets to take on a higher total addressable market. That is a check, 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 not just for me, but for a lot of investors. Okay, let me see. I am seeing Q2 bookings and ADRs worse than Q1. Yeah, so I don't know if you were in here during the part where I was talking about this. I'm expecting that. I'm expecting that. I think that we will probably see that, and that's probably getting people worried, is that gross booking value will probably decrease on a year-over-year basis, but nights and experience booked will continue to climb. I want to be a market leader, and in that way, capturing the larger audience, because I think there's been a little bit of a shift online where people go, you know what, forget about Airbnb. Let's go back to hotels because the cost has just got so, crazy with things like cleaning fees and all these hidden fees at the end by the time people actually check out. So they're doing so many things to fight against that. And you want people thinking travel, Airbnb, right? A weekend away from home, Airbnb. You want people thinking, I've got an extra room, Airbnb. Every single aspect needs to be captured. And I think Airbnb Rooms will be super interesting to see over the course of the next year, which I wanted them to talk more about it, than what they actually did say. But I guess there's not a lot of things to say. But as that actually develops, I'd love to see how, interesting that is. But that's going to bring down ADRs a ton. Average daily rates, by the way. But yeah, guys, thank you so much. I appreciate all your time watching all these live streams. I do these during earnings season. We'll see how much longer that's going to go up. I'll have to see on the calendar what stocks and everything I want to talk about, either in the fintech space or in my own positions that I hold. I know Airbnb is not actually necessarily in the fintech space, but I love the company too much to not want to listen to the call and talk about it afterwards. I really appreciate all the support. If you guys want, you can, support the channel by checking out any of the links in the description. I'm building out a website right now called Future Charts. Going to help visualize all this data that I'm looking through. And I appreciate the people that have already signed up. You guys have been a blessing. And I'll see you next time. Let you know on Twitter what the next live stream is going to be. Like I said, I'm not going to probably make another video for a little bit, couple weeks here, as just trying to focus on that Future Charts thing right now and build something amazing for the community. Appreciate all your time, guys. Bye for now.